Hey everybody, Economic Ninja here. I hope you are doing great. Look at this. Look at this. This is our local shopping center. It's a ghost town. Eerie, isn't it? Totally foggy, creepy. It's like it's a remnant of what it once was. I'm just joking, it's not even open yet. I'll spare you the dramatics. But you know what's not dramatic? What's going on right now with the Dow Jones and how it's getting weighed down by what? Goldman Sachs? Man, Goldman Sachs is not doing well for the Dow Jones. Let's talk about it right now and why. Dow Jones falls more than 350 points, weighed down by Goldman Sachs shares. It says right here, now you guys remember, we were talking about how Goldman Sachs is laying a bunch of people off, all right? I've been talking about how the banks are going through this little time of trouble ahead, let's say, okay? So, they need to build a bridge over troubled water so Goldman Sachs will just get to the other side. But I don't know if that's going to work out too well in the next 2 quarters for Goldman Sachs. It says right here, the Dow Jones Industrial Average fell Tuesday as investors struggled to keep building on early 2023 momentum and weighed the latest earnings results. The blue chip stock index lost 379 points or 1.1%, dragged down by a drop in Goldman Sachs shares. The S&P 500 and NASDAQ composite each fell about 0.3%. Goldman slid about 7% after the bank reported its worst earnings miss in a decade. Man, that's like almost like last time, it's a decade ago. That's like when we were pulling ourselves out of the Great Recession. Whew, it's not boding well, guys. Its results were pressured. Geez, oh Ninja, read better. Its results were pressured by declines in investment banking and asset management revenues. Meanwhile, rival Morgan Stanley posted better than expected numbers, thanks in part to record wealth management revenue. Its shares jumped 6%. Those results came after other major banks such as JP Morgan and Citigroup reported mixed quarterly results. About 7% of the S&P 500 earnings have reported earnings through Tuesday, according to FactSet. Of those companies, 70% have beaten expectations. United Airlines will report its quarterly results after the bell. Wall Street is coming off positive back-to-back weeks to start the new year, but investors may have earned or entered a hall of mirrors, according to Mike Wilson, Chief U.S. Equity Strategist for Morgan Stanley. And I could not agree more. You know, we've been talking about this banking crisis for quite some time and how it is going to get worse going into 2023. And right now, what you're seeing is that blow off top, that irrational exuberance, in my opinion, of people that were excited, even somewhat elated over the fact that the world opened back up, right, this last year. And so there was a lot of mixed emotions, a lot of spending, a lot of it, which I believe personally was frivolous spending on the parts of investors and just even the retail space, retail consumers, right? So you are seeing all of that flurry of activity coming out now in earnings. Some companies are putting out better than expected, although I want to tell you they haven't set their expectations very high. Also, you are seeing companies like Goldman Sachs, like out of the blue, couldn't even imagine this coming out. Honestly, yes, they did. And it's proven by the amount of people that these companies are laying off, all right? Now, a lot of people would say, oh, this was a false call. There's no problems here. We're gaining momentum. The truth is, all the big guys at Davos that are trying to force you into all this green stuff so that you don't pollute so that they can pollute while their jets fart out emissions to haul their lazy butts over by themselves to Davos and bring them up the hill in a limousine by themselves because they don't want to be sitting next to other dirty human beings. They are preparing for the worst. They actually said at Davos, we're going into a recession in 2023. I've told you that we're in a recession already. As a matter of fact, if you think that we are growing our GDP, or gross domestic product, I have to spell it out sometimes for people because they don't know even the basics. If you think that the economy is getting strong, then you should go and get a job at Orchard Supply Hardware. Check this out. You can't see it from here. I'm over here. Here's one of these stores, Orchard Supply Hardware. You can't see the sign. You're going to have to believe me. You're just going to have to trust me. Trust the ninja. He's not a professional, financial or otherwise. Great example of a company that just couldn't make it. Lowe's owned them for a while. They completely closed them down, in 2018, I believe it was. Then they rebranded. I mean, they were already too expensive and too niche, and they then rebranded to Outdoor Supply Hardware, so they just spelt the whole thing out. No more acronyms with these guys. They're going full Monty. And honestly, when I talk about full Monty, try and buy something from there. It's like going to Whole Whole Foods. You literally walk in there and you're like, you guys realize you're the most expensive here, right? And they go, yes, we do. And it's crazy because every time I go in there, and this is not, I'm not totally peeling off from the narrative here. You go in there and there's nobody there. It's like crickets. The employees are only there to hang out with each other, to keep each other company so they don't get bored and leave. That project is doomed to fail. Sorry to say it, but it is. And it's failed multiple times. Well, it's the same way with the banks. Banks fail multiple times. The only difference is why they're still here is because the government bails them out. It's a lot like, it's akin to what happens in the auto industry. The auto industry has went through many, many bailouts throughout the last handful of decades. And people need to realize that. And so if you think the economy is strong, well, go work for them. Or go work for your local bank. Or go work for, the auto industry. Go work as a salesman for auto. See how that works out. But I'm warning people that you need to be very cognizant of what's going on around you in the economy. And when all of the pros are telling you that we're going into a recession next year, I know I'm one of the weird ones that say we're already in it. That's okay. I think that we need to be cautious, optimistically cautious, but the only reason we're optimistic is because you're saving some money on the side and you're going to get ready to buy everybody's stuff. And I only say that in a way to hopefully encourage people to do something and get out of debt. But other than that, I guess I got nothing. All right, guys, that being said, it's happening right before your eyes. It's Goldman Sachs, think about it. They're having problems. And there are a lot of other banks during 2008, 2007 were doing just fine. Ironically, Wells Fargo was one of them back then. But it was Lehman Brothers and the cascading from Bear Stearns to Lehman Brothers that took all of them down. That's what I want people to realize. So even if a bunch of banks are doing good, they're reporting beating earnings, if the right one fails with enough derivatives attached to it, it takes the rest of them down. It's called the contagion effect. Think about that. All right, guys, that being said, the Economic Ninja is out.